Today I'm going to talk about the economy.
Good morning, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from Silicon Valley, California. Sorry for the late start, but we had some technical difficulties related to the Apple upgrade yesterday. So we have kind of a jury-rigged system going on where the PowerPoint is actually in Vermont. I'm in California, but I can see your questions. So if you can hear me, just type in who you are and whether you can hear me, and we'll get on with the show. So I see Bill from Malta, currently visiting Mexico City. How exciting. Randy in Cocoa Beach, Florida. Sophie from Belgium. Michael from Montreal. Brian from San Francisco, can hear me loud and clear. Bill from Napa. Bill, I'll see you in Tahoe next week. We have Don from Oakland, Dan from Toronto, and more and more and more. So let's get the show on the road here. Today is going to be entitled Let's Make a Deal. And of course, you all know which deal we're talking about, and that is the China trade deal. So type in your questions. When I get to the asset class, I'll address it. Next slide, please. Okay, Tahoe is coming up. Only 9 more days. This is where you're going to get some of the greatest insights possible on what the markets are going to do next year. Beautiful place, and we still have tickets available anywhere from a day-only ticket for $699 to 2 nights in a luxury 5-star hotel for $1999. And I see a lot of you have already bought your tickets, so I look forward to seeing you all in Lake Tahoe. The weather is supposed to be absolutely gorgeous. Next slide. Trade alert performance. We have had the best performance run in the market in the 10-year history of this service. We are up 11.53% month to date, and it's more than that this morning. That's on the heels of a 3% September and a 16% August, and we're only halfway through October, so the best may be yet to come. Just hang on, wait for the trade alerts. That puts us up 48.95% year to date, compared to 15.6% for the Dow average, 349% inception, and the average annualized return is 34.53%. Next slide, please. Here's our current portfolio. I'm down to a risk neutral, and you'll see why in a second. And that's because our market timing index is also in dead neutral territory. We have 2 longs in the Russell 2000 and oil. Those expire in 2 days. After Friday, this becomes a short-only portfolio, but a small one with deep in the money positions in the Russell 2000 and sorry, not in the S&P 500 and Walmart. Everything goes our way, we will be up 52.72% on the year. Next slide, please. Here's the chart, 47.24, and we already know we're closer to 49% with this opening this morning. Next slide. And 10-year record, average annualized return 35.64%. Things just keep getting better and better. And I have to tell you, this is one of the best track records I've ever seen anywhere. Don't mention that it's my track record. Next slide, please. Method to my madness, it's hard to fight the Fed. So we have a possible interest rate coming on October 30th. Until then, it looks like trade war hopes are going to support the market until then. No deal with China, so far only talk. Whenever the administration says one thing, the Chinese leadership says completely something different. So you have to wait for the Chinese delegation to go home, talk to their press to find out what actually happened, which leads to a delay of a couple of days in getting the news on the talks. what was achieved did unleash a lot of pent-up buying over the last 6 months. With ultra low interest rates and with a global cash glut, money's dying to get into this market at the right price, and people are tired of waiting. New Ukraine and tax scandals are having no market impact and also no impact on the economy. We're not buying the shift into junk stocks with terrible fundamentals like banks, industrials, and retailers, because that's just a temporary short-term short covering pop. Eventually, a failure of a real deal to arrive will take stocks to lows. Revived Brexit hopes have been another market crag. Next slide, please. Okay, back to the market timing index, and we're at 48. Next slide. And that puts us dead in the middle of the multi-year range. So right at 50, it's the perfect do nothing level. We're just below that, and actually maybe slightly higher than that right now. So I'm going to do nothing until we either get an extreme high to sell into, an extreme low to buy into, which I have been doing reliably for the last several months. Here you'll just get yourself in trouble trying to reach for a trade. So just sit with your large cash position and enjoy your performance so far this year. Next slide. Global economy is definitely rolling over. Basically, all of the data points anywhere in the world have been negative. There are almost no positive developments in the economy. Hiring is slowing, says the ADP report. Rail traffic is down 7% last week, and that's a big leading indicator, down 4% year on year. Services PMI hit a 3-year low. Producer prices are plunging, new job openings at 18-month lows. Fed September minutes are out, and traders seem to be expecting more rate cuts than the Fed is. Inflation was 0 in September, not exactly what you'd expect from a hot economy, and consumer price index is up only 1.8% year on year. It's one of the lowest inflation readings on record. And it's probably the lowest ever with a 2% growth rate in the economy, even if it's slowing down to 1.5%. IMF has downgraded their global growth forecast from 3.2% to 3%, and trade gets the blame. A 2.5% growth rate globally means that many major economies will actually be in recession. And of course, Europe is terrible, as always, with the ZEW index at a recessionary negative 22.8. Next slide. Weekly jobless claims rising very slowly, but still hugging the 50-year lows. Next. Looking at our trade war indicator, it likes the non-deal deal and the prospect of a future deal. There is a mention of a Chinese purchase of $50 billion worth of U.S. ag products. So far, no specific amounts have been mentioned. Nothing is in writing. It's just a hope. But this market's been so beaten up for so long. It's been in a bear market essentially for 7 years. We had to get a rally at some point. We got one in soybeans. Next slide. Bill Davis, my man, tell us what you got for us today.
Yes, John, I have a couple of deals that look like they're setting up for some strong buys. Darden in particular, keep an eye on it. It's right around a strong level of support. I expect to bounce. Same with Shake Shack, virtually the same, identical chart patterns. The others are as is. This Heiko is an interesting stock. It's already started to turn. I do expect to bounce there as well. CBS was a stock that's tremendously oversold, and it's sitting at a strong level of support. That's one I'd look to jump into right around this 37 handle, and I think that's right about where it's trading now. On the short side, the one in particular I do like is Align. A couple of them already started to move down. I think VMW started to kind of sell off today. So again, look for these things to start to turn lower. But a line is still rallying, okay? So I would just wait, hold. There's a tremendously bearish gap on that stock. Uh, it's possible it could come back to fill it. I don't know just yet, but right now, 219 is about the area I'm looking at for a short.
Okay, thank you. Got a whole bunch of questions in here. How do you think the SPX will behave with the China trade deals, trade negotiations going on? Daniel is asking, and the answer is nobody really knows. No one has any advantage here. You can't ask for, you can't use logic or rationality here because it just doesn't seem to apply anymore. But suffice to say, it'll just be continue to be up and down depending on the trade headline of the day, and it's what I call a close your eyes and trade market. If it's down, buy it. If it's up, sell it, and don't torture yourself with trying to come up with any logic as to why it's up or down that day. Kevin is asking, how long can Trump and Z keep kicking the can down the road? Answer, indefinitely, unless Trump wants to completely fold. And it looks like he was bested in the latest round in negotiations because the Chinese agreed to buy food that they were going to buy anyway in exchange for a tariff freeze. Of course, you really don't get a trade deal until you get a tariff rollback to where they were 2 years ago. Okay, let's see. James is asking, did I miss the update on the Citibank trade? The answer is yes. We came out of Citibank a week ago for a small profit or a break even. You should always check our website where we post our trading position sheet every day as a backstop to any trade alerts you're getting by email. Occasionally emails just go completely missing. They get disappear into thin air. We don't know why that happens, but it happens to everyone. So as a backup, always look at your daily position sheet on the website. And if you don't know how to find that, just email us and we'll give you directions. Okay. Let's see what it was that you missed. Right. Okay. Another question here. A lot of China questions. Here's a General Motors question. How much pain will GM incur from this standoff, the strike, and will they ever reach a compromise? Well, the answer is yes, they will reach a compromise. The union kind of blew it in striking GM when they had incredibly high inventories, which they are desperate to get rid of ahead of a recession. If you wonder where all those great car deals are coming from, that's the reason. Every car company wants to go into the recession with as little inventory as possible. And it's not just GM, it's everybody who's got the same problem. Let's see, more questions. Trade sheet gets posted usually about an hour after the close every day, Brian. We need time to process our trades, update all the position sheets, and get it posted.
I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.